All right, so this is NQ3925 Outlook and Review. So let's go ahead and get into it. So the review, if you remember from the 3-6 Outlook and Review, uh, the outlook was continued bearish price action, and the liquidity target was 19,829.25, which was the next structural point, also a liquidity point in the markets from the macro perspective. Well, we reached that on Friday, 3/7/25, I believe it was, and it was very quick, very quick. And I'm a little salty about this particular trade because I found, usually, like I find the sponsored candle or inefficient pricing or the point of interest in which price is going to react on to take a trade. And in this particular case, I misplaced my stop loss, so I'll go over that here in a second. But yeah, so we clearly ran to the target, which is the liquidity point that we marked up, one of the three that we're looking at. And we cleared that one, and it seems right now we have a liquidity grab. So we're going to see what happens here, and we'll go over that later on. But the 2-minute perspective. So bulls down, doing my usual analysis, whatever, and I stumbled upon this point of interest, and I was like, in the previous video, I remember said that I usually do conservative entry and place my stop at the open, or not my stop, but my entry at the open of a candle, of a sponsored candle. So usually my entry would be here. But this time I decided, based on how many points or ticks this was about a 20 point stop. Yeah, 20-point stop loss from here to here. So what I wanted to do was like, okay, that's a little large for what I was looking to do. So I was like, let me see. I mean, the way the price action is going, I wouldn't doubt that price would hit 50% of this. But in thinking that way, I neglected to put my stop loss here, which is the correct place. And I actually put it at the top of the body of the candle instead of using the entire candle to incorporate my stop loss. So I set my entry here at 50% and my stop loss here, and ultimately, this is what happened. So all this has happened after the target, sorry, all of this price action here happened post target liquidation. So what happened here was got the 50% entry perfect, but got tagged out because my stop loss was misplaced. It should have been this top line here, but I put it at the second line. And ultimately, as you can see, that was the play. So yeah, a little salty on that, but I'm glad to see that the analysis was correct, but the execution was poor in this particular trade, which is totally fine. Lost a very, very small amount of money on this trade compared to, in the past, whatever, previous trades. But the risk was managed well, but did not follow the rules I had for taking this particular trade setup. And so, yeah, so just logging that and making sure I don't make that mistake moving forward. As far as the price action, so now what we'll do is we'll go over here to the charts and get into the outlook. But yeah, overall, it was a great trade. Great play out. So let's go ahead and get back up to the 4-hour, start from the 4-hour. So as you can see clearly, like we reached that daily liquidity point, structural point in the market. And I remember how I always talk about once we reach a daily or a macro structure point, I want to see how price reacts with a little bit more data if we are looking for a reversal, or, what happens? Do we continue the bearish price action or to continue the current phase of the market trend, or do we begin transitioning into the next phase, which would be a range phase, or just, it could be a quick range phase and then a run phase to the opposite side, so indicating reversal. But overall, I'm ranting here. We got a liquidity grab of the structural point, which is great. But now what I would like to see, which is also based off the reaction here, that we now reacted and we cleared intraday liquidity that I just had marked here. We cleared the daily point. So now we are, bullish here right now, currently. But just because we are bullish, and I'm going to keep reiterating this, does not mean that a reversal is coming and that the market will now transition from a bearish phase of the market into a bullish phase of the market, right? If we remember correctly, there are only two phases to the market that I always say that, claim. There's a run phase, which is currently what the market is in as we are running down, which creates that trending market, that snaggletooth or jagged motion. And then we have the range phase, which is the phase that, began this, which was what was from here to here, and all of that was ranging. Right now, we are still in the bearish run phase of the market. So, all that being said, what I need to see now in order to transition my bias from the macro perspective from a bearish to a bullish phase of the market is I want to see price action form here, not on the micro perspective level. I want to see it on the macro perspective level. So we're talking about the 4-hour, we're talking about the daily. I want to see structural points broken on this level, right? So I want to see, if I was looking at the 4-hour, I want to see that high broken, right? And specifically not that high, actually. This is the liquidity here. This high did not go higher than that high. So I want to see that structural point broken, right? If we are to begin transitioning, I want to see that high broken. And then what I would like to see is some sort of price action like this. So we break that high, sustain break of structure, then we begin the pullback, mitigating whatever inefficient pricing or something is in here. And if that occurs, then we'll take the entry and we'll begin moving to the upside. Or another potential play, that's not what I want to do. Another potential play would be something like such, where we do get the break of structure and then we get the pullback, fail to break, fail to break, fail to break, and we now have a range created, which will be a bullish range based on the break of structure of a structural point to the upside here. And then I will begin playing within the range, anticipating that we will break out to the bullish side. But if we break down to the bearish side, well, then we already know what happens. We continue the bearish run, and this is just a failed bullish range, and we convert back from the bullish range phase, and we convert into the run phase, just continuing the bearish price action, in which we will look for those next targets, which will be those daily structural points that I marked up. Right? So it's really simple. Try to keep it real simple with the analysis and moving forward, and confine it not to the lower time frames, the micro perspective, the nano perspective, to judge, are we going to get macro level transitions in the market, transitioning phases. We want to judge all of that from the higher time frames, from the macro perspective. And then what we do, using the micro perspectives, using the smaller time frames, is we align ourselves with the macro bias to find whatever entry model, entry trigger you want to target those macro structural points and liquidity points in order to frame up low risk, high reward trades. And that's pretty much it. So overall, right now, I'm on the sidelines, but just because I'm on the sidelines, I will say that the bias currently is still bearish. This liquidity grab is noted, but until we get more data to confirm and validate the transition from a bearish run phase into a either ranging phase of the market or a bullish run phase in the market, the bias right now from the macro perspective is still bearish. We are still bearish. And that's actually something that I went over, is that we saw something similar here. When we broke this structural point, we had a liquidity grab here and we closed, bullish. But just because, and remember I said we needed more data to see if we were just going to come back and mitigate, this daily point of interest, whatever, and then refine it to the micro perspective and saw that, hey, no, this actually ended up mitigating a 9-minute, 15-minute sponsored candle, and that sparked, the price action to take out the next structural point. Similar Very, very similar logic is applied here. We need to see the data, more data printed, and we'll verify that based on, you know, the microstructure or the micro perspective structure that forms, but in confluence with how we're mitigating the daily or the macro perspective structural or points of interest, right? Because right now I could see this as, hey, this is just this move happened, but this was just to to balance, this inefficient pricing that was created during that day. And now what we could see is just as this is now balanced, we could just see a transition to continue price lower, because that's actually one of the principles in the market that I agree with, or that I've discovered, is that, yeah, price is always going to go balance inefficiency in the market. That's part of the efficient, market theory, is if there's inefficiency in the market, price is naturally going to be drawn to that area of the market, which generates trading ranges. That was what I talk about all the time, right? But yeah, if you want to study that a little bit more, go look at efficient market theory, whatever, there's multiple interpretations of it, stuff like that. But from the technical analysis standpoint, it's really this simple. As we look at structural points, we base our bias based off the macro perspective and how price reacts at those structural points, liquidity grab, break of structure, confluence with more data to confirm change of bias. Then we find our entries and we target those macro structural points for low risk, high reward setups. Right. So going back to the outlook, currently we are still bearish bias unless we get confirmation of bullish structure transition from macro perspective, right? If not, continue bearish outlook. And that's it. That's that simple. No need to overcomplicate it. No need to be like, well, what if this happens on the the micro perspective? Whatever that. What if we get, this break of structure, this CBOS, whatever, this liquidity run here on the lower time frames. Like, look at how the market closed. This, no, keep it simple. Stick to the macro structure. Stick to the macro perspective. Judge everything based on the macro perspective. I'm ranting about this because I see it way too many times. I've done it too many times. And yes, everything governs from the top down, not the bottom up. Make this money. Peace.